Hello, everybody. It's Dan Basse and Ben Buckner back at you on Friday, the 26th of September. We're heading into a very active harvest weekend. There's been a lot of news surrounding the markets this week with Argentina, with, of course, China, and now Trump yesterday indicating that he will hand out tariff dollars to the U.S. farmer who have been harmed by his tariff program. You know, as I think about it, as you think of the impact of what's happening, the tariffs that Trump is handing out is kind of indicating that he's not expecting a U.S.-China trade deal anytime soon. I think the U.S. farmer needs to understand that. There are commercials that believe that the U.S. will not export to China all year round. The reason for that is because if you look at the 20% tariff that we have for fentanyl, that brings into the U.S. Treasury $90 billion. If China were to buy some soybeans, maybe it's somewhere around $400 or $4 billion. $5 billion. It's not going to offset that. We have missed the window for China's big import program. And so if we think at Ag Resource about modeling what U.S. soybeans exports would be in a crop year without China, we would drop down to about 1.2 or 1.25. So that's something to chew on over the weekend. Part of our thing at Ag Resource is to get you to think ahead. So not only managing risk, but thinking ahead. Again, I'm disappointed that the United States is supporting the Argentinian economy. And at the same time, that Milei was able to raise $7 billion. If we look at the Chicago Board of Trade this week, we're unchanged on corn and wheat prices. Beans are about down 10 or 12 cents. Ben, kind of lead us forward in what you're seeing and what you think.
Yeah, I think so. And that's a good point, Dan. I mean, we even don't care as much about the October WASD. We're kind of thinking beyond that. You know, how does the March WASD of 26 look? But here we are. Yeah, the markets have done very, very little this week. Chart patterns seem to be driving, at least to some extent, trading patterns. And so you can see here, December corn, the 50 and 100-day moving averages have been pretty intensely respected so far. The 100-day moving average still pointing a little bit downwards, but I did want to highlight that the 50 and 100-day moving averages probably cross in the next 1 or 2 days, and whatever that means. So we're cognizant that chart resistance still intact, still exists. And so I think one of the theories that we have in December corn is, and it's hard to prove with the data, but it's kind of a unique year in that, you know, old crop stocks are not abundant. You know, this is, I don't know if tight is the word, but small. You know, carryover inventory currently is not very robust. That changes. We'll have the most corn we've ever had in the next 45 days. So does that change seasonal trends? So that's something that we want to think about. As we move on to soybeans, pretty clearly the market is either trading above moving averages or below moving averages. And the catalyst this week was, of course, the Argentine farmer exporter sales were now below those moving averages. So probably it looks like if you have some weakness today, early Monday, we're kind of back to $10, sub $10 November future. So again, chart patterns rigidly neutral, but we are at key levels almost every day. None of those have been real, market changing so far, but we do want to keep in mind where these lines do cross. Wheat, still the dog of the marketplace, and that makes sense because we're not waiting on crop production estimates in the Northern Hemisphere as much. We're not concerned or uncertain about yields. We know that the world's wheat crop is very, very big and probably getting bigger. The Argentine wheat crop this week, almost 90% good to excellent. Some pretty key areas, including the province of Cordoba, 100% good to excellent. That's not something we have seen since 2017. So I think the wheat crop in the Southern Hemisphere is getting larger. So you can see here in wheat chart, December Chicago, pretty robust resistance, you know, from 525 up to 555. There's a lot of work for the wheat chart to do to change this trend, which has been modestly bearish, still looks that case today. I think fundamentally, you know, we talk about the aid proposed by the U.S. administration, Chinese demand. We have missed the window. And then this is why we've been sounding the alarm bells, as I know we've got some yield uncertainty that lingers. And I think maybe one of the features of the market is that the Chinese demand can change with the strike of a pen. We just don't think that that's going to happen anytime soon. But pace analysis. This is a very, very good chart we like to look at every week. And I think we revisited this a week ago in the video. This just shows what we have sold compared to the USDA's annual forecast. And you can see that the red line is below the yellow shaded area, which always means the USDA is going to make a move in their next WASD report. So if we assume, we've only sold 404 million bushels, that is about 24% of the USDA's forecast. It is supposed to be 40% of the USDA's forecast. But if we assume like last year, that this reflects about 34% of annual shipments. That puts exports finally at 1.2 billion bushels. So you're cutting exports 400 million ultimately from today. So this has to change. We've also got, I think, open harvest weather. It's going to be a very pleasant weekend, really for the next 8 or 10 days. There's really no disruption. So I think we are going to transition the physical U.S. corn market to one being of not large supplies to all-time record supplies. So I think that we might do a pretty abnormally strong, 10 or 12% in the week ending Sunday. So harvest should be about 20 or 21% complete. And then look at this graphic as we move forward. So we're still kind of in the early days. It's fits and starts with respect to national corn harvest. I think we are going to harvest 6 or 6.5 billion bushels from October 1st to October 20th or so. So we got to pay attention to what cash markets start to do when we see that full replenishing of the pipeline. And lastly, thinking about moving forward, thinking ahead, we're already on to the southern hemisphere growing season with corn and soybeans. So Argentina, very active planting corn in surplus soil moisture. They're 12% complete today. That's a little ahead of last year and average. And I think they're going to get to 30 or 35% planted on corn in the next couple of weeks, which starting with, we'll revisit yield potential in December, but they're going to have corn, February, early March. Brazil's going to have soybeans, 5 million tons or so, probably the second half of January. So it's not far off that we're thinking about end users and importers having access to southern hemisphere supplies. So keep that in mind as we navigate these markets. And we have some, the last part of U.S. yield volatility.
No, good rundown, Ben. I think as you look at the markets here today, it's all about harvest hedge pressure. I think your point is a good one. China's on holiday for a week starting next Tuesday. Again, the bulls need to be fed, and if USDA closes down because of a government shutdown, no export sales, no export inspections, no USDA October crop report, because those surveys are now starting, and we need to see if those enumerators will be heading to the fields next week. Everybody have a great weekend. Good luck on the harvest. Let us know what your results are. We are anxiously waiting that. And again, be safe, everyone. Well, looking at a very good weekend weather-wise here, and we'll be back on Monday.